Starbucks collapsed after announcing earnings last week, with target prices being slashed and buy ratings being revoked when Starbucks had a surprise sales decline and revenues miss. Sales were down across the board and margins also narrowed. The company reduced fiscal year guidance and underperformance may continue to occur. Starbucks is a consumer discretionary item. This means they are highly desirable for their consumers, but they're not exactly essential to live, right? Your heart is beating with blood, it's not beating with Starbucks coffee. So not essential to living a day-to-day life, though many coffee fiends will certainly disagree. This decline hasn't only been seen at Starbucks, as consumers are starting to run out of cash and prices are just unaffordable. We're looking at prices well above $6, $7 for a simple cup of coffee. Just grabbing 3 items at McDonald's is now over $20. Inflation has just gotten so ridiculous. You may have heard of this before, but the Big Mac Index is used as an informal way of measuring the purchasing power parity between different countries and currencies. Generally, CPI inflation and Big Mac inflation move parallel, but lately the price of a Big Mac has far outpaced CPI data. It just shows that this news was inevitable, and now Starbucks has over a 3% starting dividend yield for the first time in history. Yet people are now rapidly selling out of Starbucks. Despite being around since 1971, this one bad earnings report, this is all it takes to spell doom for the coffee house chain. Guys, why are people like this? Why do they say they love being a long-term dividend investor, yet they will sell out at the first siren of bad news? The stock market is the only store where things are on sale, but people run out in fear. If Starbucks was such a great company a month ago, I'm highly doubting it just became hot garbage after a 1-hour earnings call. Like, I know listening to their CEO Laxman is nails on a chalkboard, but don't worry, we're gonna be able to react to his terrible interview soon enough right here. People are forgetting how popular of a brand that Starbucks coffee is. Worldwide, it's known. That green, white, and black logo is across coffee chains around the world. Just because they have been caught in some political protest around the world, that doesn't mean that the most loyal of coffee drinkers are gonna abandon Starbucks. Yes, I know a lot of young people are saying they're not gonna drink Starbucks coffee because that goes against their pro-Palestine stance, but believe me, this is just going to be short-term news. A winning investor thinks long-term. How am I going to profit off of this? How can I extract value where nobody else sees it? We can all agree that Starbucks' latest earnings report was not good, but Starbucks now trades well below its 200-day moving average of $94. Keep in mind that Starbucks has a loyalty program with over 75 million members that were active in the past 90 days. These are people that are addicted, total fiends for that coffee. These are all folks that we can rely on to power those Starbucks operations. These are the people that are putting money in our pockets with dividend checks. This is where the source, the origin of those funds are coming from, is from these loyal customers, 75 million worldwide, super strong. Starbucks also plans some aggressive store growth internationally, planning on going from 20,000 stores to 35,000 stores by the end of 2030. Now, that doesn't mean that Starbucks isn't without risk. They're doing a lot of expansion in the super friendly country of China, which has a great relationship with Taiwan and the United States. They're basically signing a peace treaty to show how great of friends they are. Totally not the opposite of what I just said. So Starbucks has paid quarterly dividends since 2010. Every single year, they have been giving out dividends. They've been raising dividends in that time span as well. So some may say that we're in a caffeine bubble, but I disagree. People love coffee. This is not a new fad. Prices are just simply too high. Guys, companies have bad earnings reports all the time. We have these ridiculous expectations that every earnings report is just going to be a smash hit. That is not how the real world works. We live in this instant gratification age where every single news must be positive, but that just doesn't happen in the world of business. Prices are just way too high. People are tired of being asked to tip every single place they go. Not every single job deserves a tip, especially when you don't do any additional work other than what your job entails. Or maybe, just maybe, it's because according to their CEO, people just don't understand the value of Starbucks.
That investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about, I checked with all the major, both public and private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the U.S. occasional customer, they have clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong. But there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it?
What secret value? What the hell is he talking about? This isn't like a super secret video game character that we need to unlock. We know exactly what to expect when we're shopping at Starbucks. Nobody ever entered a Starbucks and was like,
where can I find the Twinkies and garden hose?
The value that Starbucks provides is a drink of half sugar, half ice, and a little bit of air and a little bit of milk. You wouldn't have a hard time believing that Laxman previously worked as a consultant at McKinsey for 2 decades. He's giving several non-answers to questions just like a true consultant. Anytime Jim Cramer of all people makes you look foolish, you're definitely doing something wrong. He cut him off, he challenged Laxman many times during the interview, and each time Laxman responded with buzzwords like finding value. Why don't we just address the issue that Starbucks is really hurting from inflation? Prices are just too high and inflation is out of control. Laxman's days as the CEO may definitely be numbered. This interview was widely panned all across the forums of Reddit and YouTube, as he should have been, as he just kept trying to find buzzwords to say instead of just saying, we will not lower prices. Laxman may need to relax man soon. All right, so if you're still with me, if you haven't unsubscribed, nevertheless, these days, I am a long-term Starbucks holder, and I think they're going to be doing just fine. I took this as a huge buying opportunity, adding to my position in Starbucks. Starbucks now has an overall hold rating, and many companies have dropped their target prices, but Starbucks still has a consensus price target of just under $100, which means there's potentially 32% upside from today's prices. This was an absolutely terrible earnings report by Starbucks, but one company that's up over 50% in the last year is a business development company paying a starting dividend yield of over 8%. Check it out right here. Guys, why aren't you on the Discord yet? We're having so many great conversations in there. It's a great way to stay motivated, learn something new, and talk with other like-minded dividend investors. Thanks to my Patreons who get to see all my weekly trades as I continue to beat the market. Be sure to like, comment, and subscribe, and I'll catch you on the next one.